The trouble in Iraq impacts a lot of U.S. energy companies that do business there. Morgan Brennan now with a look at which firms have operations in Iraq and what's at stake.
Iraq has the 5th largest proven crude oil reserves in the world. As the conflict escalates, the threat of disruption to production looms. It's a scenario that could impact a number of U.S. energy companies, starting with integrated oil giants. ExxonMobil, Hess, Marathon Oil, Occidental Petroleum, and Murphy Oil all have operations throughout Iraq. And of these names, Exxon, the most exposure. But analysts say Iraq still only accounts for a small percentage of these companies' overall global production, meaning the benefits associated with rising oil prices could more than offset the negative impacts associated with local disruptions.
The other 95, 96, 97% of the business for these guys is now theoretically more profitable. There's more business to do because the oil price is higher, just so long as you don't get it so high where you start to worry about GDP growth and doing some economic damage.
Another industry with exposure to Iraq, the oil field services companies, which service and maintain oil companies' equipment.
You're talking about Halliburton, Schlumberger, Weatherford, and to a lesser extent Baker Hughes. They made an early push into the country. A lot of operations in the South. Frankly, haven't been terribly profitable. They've been trying to push that back to break even or maybe a little bit better. Have had some success with that.
Production disruptions could have a greater impact on these companies' bottom lines. Something we've seen before when Baker Hughes reduced fourth-quarter profit after operations were suspended at a facility in Iraq just last year. Still, a lot is going to come down to location. Southern Iraq accounts for the lion's share of the country's oil output, but it's actually Kurdistan to the north where energy companies stand to lose the most. That's because many oil companies and oil field servicers have been increasing their investments and operations in that region. It's held the promise of bigger profits than the South, and escalating conflict could derail those efforts. For Nightly Business Report, I'm Morgan Brennan.
John Kilduff joins us now to talk more about Iraq and the impact on U.S. energy prices. He's founding partner at Again Capital. John, thanks for coming by to talk with us.
Thank you.
Let me start right off with prices and where they're going. You're predicting worst case scenario, that if things really get bad, it could get up to $150 a barrel. Talk us through your thinking on that.
Well, in times like this, we're already in a multi-month high right now. So we dust off the chart and see where's the high water mark when you look back. That was 2008 when we hit $147 a barrel. So just sort of sitting here today, round number, resistance, and an upside target. That's the number. We've gotten through 105. Next up is 110. I think after that, that'll be generated by some real damage on the ground or real worries or even what I'm calling a credible threat to Baghdad or the central government. That's when we're off to the races and you'll see those numbers.
Worst case, 150. What is the likeliest case in your view?
You know, I'm not too sure on this one, Tyler, to be honest with you. This happened so quickly. The oil market hasn't overreacted to this because the northern output from Iraq has been offline for months. So this is nothing really new that the market hasn't been able to deal with already. But the southern oil facilities, that's 3 million.
That's the bulk of their production.
That's 100% of it right now. It's 3 million barrels a day. To put that in perspective, that's 10% of OPEC's 30 million barrel a day commitment to the world right now. So it's a lot. It's meaningful and it can't be made up. So that's when you start to get into this what if scenario. I think if it calms down and they relax, you know, prices will come down quite quickly.
And then what kind of adjustments can you make for going offline? I mean, will OPEC increase its production? Will the U.S. tap into the Strategic Petroleum Reserve? I mean, what kinds of things can we expect?
Well, OPEC doesn't have the capacity to make up those 3 million barrels. It's just not there. So that's what makes this so dire if it is impacted. The U.S. does have upwards of 1 billion barrels in storage. It could tap them. Thankfully, we are producing 8.4 million barrels a day ourselves, but that's not enough to insulate us from this. So this represents still a shock to the system. Every $10 a barrel that's sustained, it's a half a point off GDP, and the numbers start going from there. Because what happens when that pump price hits $4.50, say $5?
That's what I want to ask you. What do you see for prices at the pump later this summer into the Labor Day season?
You're talking $4.55 as a result of the kinds of prices. If we get to that 110, 115, 120 easily, and the boomerang effect on that, Tyler, is the consumer confidence just implodes on that, and then it's a whole big syndrome of people pulling back for a variety of reasons, not spending on retail and vacations, and we're back in a recession.
You know, I saw a headline today saying that the Iraq civil war threatens the whole global energy supply for years. That seems like a really strong statement. How true is that?
Well, you know, this whole situation was predicted when Iraq was first invaded back in 2003. We were worried about the country breaking apart. We were worried about a Shia arc because where the Shia are, the Iranians, the central government in Iraq is where most of the oil is. But this is really a pitched battle between the Sunnis, who are the Saudis, and the UAE, versus Iran, principally, and now their counterparties in Iraq. So this upsets the entire balance, and it's not as if these are Sunnis that are friendly to us like the Saudis are.
Right.
They're a pretty brutal group, as we're all finding out. So they're not going to be too inclined to get lower oil prices to the West to keep our economy going. So it's a problem all around.
All right. A lot of good information. John, thanks
Thanks.
again
Thank
for coming
you.
by. Appreciate it. John Kilduff with, again, Capital.